Good morning, everybody. Happy Thursday. We'll get started in just a minute. Okay. Let's get started. Good morning, everybody. Happy Thursday. It's May 15th. Serge Berger here from thestudytrader.com. This is our Set the Market morning call. If you are here for the first time, what we are doing is we're going to spend the next 10 to 15 minutes going over the top few things on my notepad here. Please make sure you subscribe to the channel. Allows you to be updated in real time when we go live with analysis. And of course, it also helps us be able to continue to do this morning show, and please give us a thumbs up like. So let's get started. The top few things on my radar this morning. I do want to quickly talk about 30-year bond yields, which once again are at a level that I think will not be going unnoticed for the equity market, particularly given where equity markets are trading. We'll look at NASDAQ 100, S&P, VIX, Palantir, United Health. A lot of questions on that one yesterday. And then I'll show you guys one way to protect a portfolio with a very simple ticker, actually, that you guys can look at as well. So let's get started here. We'll start off with the bond yields, and for that we are looking at we're looking at the 30-year bond yield. Now, this morning we had a whole bunch of news, some stuff coming out of Trump's Middle East trip, which is really why the market has continued to elevate over the past couple of days. A lot of hedge funds that I've been speaking with, and I mentioned this yesterday over in Trade Ops, our members area, throughout the day, that a lot of people I speak with are basically kind of on hold, not doing much. The market's overbought. We're back to a 22, 23 forward multiple on P's for U.S. equities. Seems very rich. Doesn't mean it has to crash, but certainly doesn't make it easy to buy up here. Still better value in other markets around the world. And of course, this morning we're now getting PPI, which came in a bit softer. So the initial reaction of the equity market is to buy. The algos like to buy. That's what they do. And here we are in 30-year bond yields. So 30-year bond yields, which we touched on quickly yesterday here as well. We're back at that 4.9, call it 5% level, right? And I think if we were to break above here, particularly if we were to hold above that, that sort of would be the secondary effect. That will be something that equities are not going to like too much. So I would watch this very closely. I know we're watching it very closely. At the same time, we are seeing the curve steepen, and I realize this is a bit of a foreign concept for retail investors, but on the short end of the yield curve, so let's say 2-year bond yields, what you're seeing is bond yields are actually lower. They're higher in the long end, so that's what's called a steepening of the yield curve. And that's why we like things like, for example, the IVOL ETF. IVOL, I'll repeat one more time, IVOL to us makes a lot of sense in this type of an environment. So that's number one. The second thing, we need to continue to just give you guys an update on S&P 500, NASDAQ 100, and we'll look at the VIX as well. I mean, quite frankly, in many ways, nothing's changed over the past couple of days. We're roughly in the same spot in terms of where we're at sentiment-wise, and kind of how far we've come as we were Monday morning, where we gapped higher. So what you're looking at here is the SPY ETF. You can see that we gapped higher Monday morning, so that May 12th gap will be very relevant to me, at least. So I want to see if that gap holds. I want to see how it holds, how the market reacts around that gap. That'll be very important, and we're not going to know until hindsight. So unfortunately, don't have a crystal ball either. Unlike some people on Twitter and YouTube who I'm sure will give you their crystal ball, be careful. It's all bullshit and scams. But if you want to have a repeatable process in the markets, you need to have a process as opposed to some, Yahoo forecasts that are outlandish and just stupid and clickbait. So as far as we're concerned, we remained in that area that, again, we've talked about it now for 2 weeks. And if you're new, obviously, you'll hear this for the first time. But we've talked about this area of resistance that we're now pushing into. So, it's more of like a pillow as opposed to like a hard board where you bounce off of. But I do think the froth zone, which is, I think the way I mentioned it, the way I called it yesterday. In fact, I can quickly show you guys the froth zone chart from yesterday. Let me quickly bring that one down. This one here. This is the chart that I showed yesterday morning here, and I showed it over in trade ops as well. So we're in the froth zone. Again, that does not mean that market has to have to collapse for here. Can we squeeze a little bit higher? Of course we can. But at this point, it just feels like we're picking up pennies, in front of a bulldozer that could easily mean revert again. Again, we're not talking about immediately going back to the April lows. Those were outlandish forecasts. But we certainly could mean revert. I mean, there's no reason why we can't drop 3, 4, 5% here very quickly. It's not a forecast. I'm just saying hypothetically, we use our momentum indicator, the trender, and we will be alerting people with that in real time over in trade ops, as we always do when we start to get more bearish signals at this point. So that's where we are. It's really the same situation over in the NASDAQ 100. To no great surprise, probably. So the QQQ ETF, for example, a little bit higher because we have a bit of a squeeze. Semiconductor stocks had a very sharp bounce. In fact, if you look at I'm going to quickly share with you the performance here of the year to date, and particularly the snapback. You will see that semiconductor stocks are actually now up on the year after being down as much as, call that 25% on the year. And the DAX is up to almost, 27, 28%. Argentina is up a lot, Vietnamese stocks, and then Palantir is up 72%. I'll get to Palantir. We've talked about Palantir for the past couple of days. I want to give you guys an update there as well. So as far as I'm concerned, this is the froth zone. Again, just to maybe say it one last time here today, it doesn't mean that we have to fall apart. I certainly am not buying anything up here in any meaningful size. I think the reward to risk is terrible. The reward to risk was great, down here. And for those of you guys that are using our Vertical X Pro indicator, which is the extreme oversold, overbought indicator, we talked about down there. We got 20 pages of oversold stocks in early April. There's no reason to buy them up here if we had an opportunity to buy them down there. So that's at least my thinking. Obviously, some people have different processes, but that's kind of where we are. The VIX is sort of the last piece in the puzzle. And, I have these 3 boxes here. You might ask yourself, what the hell is this? Good question. What this is essentially the VIX divided up into 3 areas. We are right now in what's called the choppy zone. So VIX below, particularly below 15, is typically where it's a blind buy for risk assets, at least from a vol targeting funds perspective. If we're between sort of the 15-ish and low 20s, and it's hard to define exactly, which is exactly where we're at right now, but I'm saying it's hard to know whether it's 15, 16, or 17, or whether it goes up to 22 or 23. It's within that area. We typically have a market that's choppy, and that's what we have right now. And quite frankly, when we started getting into this one in late April, that's exactly when we started getting a very choppy market. Now, granted, on Monday we had a big up gap after the China tariff pause, but we remain in the chop zone. So that's another reason why I'm cautious up here. And then, of course, you have the VIX basically 25 and above, which is the top box. That's basically risk off. So as soon as we started getting into the mid-20s, we started getting more cautious on the short side, which is the exact inverse of what I just showed you before. It's the same idea. But, of course, as the market started to rally, stocks started getting into the sort of late April, even the third quarter of April, we started seeing the VIX get into that mid-20 area, which is exactly what I just mentioned here. So to me, all signals tell me that I need to be careful here. I don't think there's any decisive thing to do here. Tony, another question from Tony. I think it's a daily occurrence. He asks, where do you think something queues go a certain date? I don't know. And if you kind of listen to what I'm just saying, Tony, and it's a good question, I don't know. What I do know is that we're in a choppy zone. Right. And so one of the best things that I can tell you, that the best traders I know, that what they know what to do is they know when not to trade. To me, right here, right now is one of those moments. VIX between, again, the high teens to the low 20s. I have no edge. I'm sure someone on Twitter or YouTube will give you a definite answer. There's a bunch of underwear traders out there. They have massive opinions and no experience. From a reward to risk perspective, I see no edge here, quite frankly, in many ways. There's obviously always a little something to do. But particularly for something as big as the S&P, the NASDAQ, or the German DAX for that matter, I have no edge. At least that's my process. So I can't tell you what to do specific from a level perspective because it's way too choppy and it's basically driven on headlines. So, but I will say this: if we were to see the VIX go back above 25, I would start to say, you know what? Now maybe we have more edge again on the downside. If the VIX goes into below 15, then quite frankly it's risk on, right? So again, a lot of new people in the markets, a lot of people with a lot of opinions and no experience. So just please be careful what you see on Twitter and YouTube and all those other forums. There's a lot of underwear traders pretending to know something, but they have no experience because most of them have traded for less than 15 years, which means they've seen one market, which is a raging bull market. And that's why we have a gambling bubble. So that's just from a risk management perspective, my 2 cents. So that's NASDAQ 100, S&P, VIX. So we did all that. Let's talk about United Health and Palantir. So when we talk about United Health, we need to talk about what's going on with this stock from a momentum perspective. So that's exactly why we use the Vertical X Pro indicator. So when I think about anyone that wants to be a trader or investor, there's essentially 3 things I believe everyone needs. One is an extreme oversold, overbought indicator. And I say extreme, which is what I'll show you here with the Vertical X. Number 1. Number 2, everyone needs a momentum indicator. We use the TSD trender for that. If you remember, And thirdly, you need a way, and it's most important, you need a way to measure the major trends. When they change, when they start, when they end. Without that, there's really no help. So for United Health right now, what's important is to understand that according to our extreme oversold indicator, United Health is getting to a point of extreme oversold. That does not mean it's time to buy it, right? Again, there'll be some underwear traders on YouTube and Twitter that'll tell you with unbelievable conviction, because they have no experience, to do this, that, and the other. There is no conviction here. We're waiting for news. We had another set of bad news last night. At some point, the stock will bounce. When that is, I don't know. But I can tell you that our Vertical X Pro indicator is getting close. So what the indicator does is it tells us when something is likely to stop going in the prevalent direction, in this case down, at the rate at which it has. And so if you look at, for example, United Health, when it got very overbought in July of last year, the stock didn't fall apart. I mean, it ultimately did go down 46%, but over the course of the ensuing weeks, it just basically went sideways. So what I'm waiting for, and if you guys would like me to, let me know. I'm happy to revisit this on Monday, see where we are. Maybe give us a quick type in, yes or something into the chat box if you want me to update you guys on Monday as well. But we're still printing the arrows on our indicators. So it's not yet time for me to buy the stock. It's not yet time for me to do something on the options front. At some point, we'll probably get some good news. To me, the edge just isn't there. That's just my approach, right? Everyone's got a different approach. But to me, I'm in wait and see mode, because the stock is still, our indicator is still telling me that the stock is not yet done going lower, or the odds of the stock going lower have not yet gotten any less, right? So what I'm looking for is a day when this error is no longer there. That could be at the end of the today. That could be the end of the day Friday. It could be the end of the day at some point next week. I don't know, right? But I'm willing to be patient and wait because I don't know, right? So the I don't know part, again, it's not something that the underwear traders on YouTube and Twitter, the pretend or gurus will tell you, because it doesn't give you clicks, but through the lens of honesty and transparency in a process that works, I'm willing to tell you otherwise. Be patient, wait. We just don't know right now, right? So that's why we decided, so that's why we're waiting. That's why there's just nothing yet. At some point, there might be something setting up. Once there is something set up, I'll tell you, for me, what I'm going to do is I'm probably going to put on what's called an options bull put credit spread. I will not be going out to buy options, and I probably won't be buying the stock. And the reason for that is because with an options bull put credit spreads, at least just for me, I'm going to be able to capture the expensive implied volatility. And I know this might be a foreign language for some of you, and that's totally cool. We can go into that more if you guys would want to at some point. But the implied volatility right now is very high. So if you look at the bottom pane here in this chart, you can see the implied volatility of United Health is currently in the mid 50s. So that means that the options prices are very juicy. They're very expensive. So I personally don't want to buy expensive options. I want to be a seller of expensive options to take in that premium. However, it's not helpful to sell expensive options if the stock is still basically has high odds of continuing to go lower, right? So I'm waiting for a day when that arrow no longer prints. Does that make sense? I'm going to quickly just give it a second here just to see if anyone has any follow-up questions on United Health before we continue. Or maybe I'll continue to Palantir, and if you guys have to go to Palantir, if you guys have more questions, let me know, and I'm happy to go back to United Health quickly. But just quickly on Palantir, Palantir is basically tracing out, and we mentioned this yesterday. We actually put on a bull put credit spread on this one. Palantir is actually tracing out what's called a cup and handle pattern. Look, if the broader market goes down, this stock's going to go right back down as well. But for the time being, the stock remains quite well supported. I would imagine a stop loss, around 107, 105 would get me out of this if I was long the stock or some sort of option structure. On the upside, it's blue skies ahead. I mean, I just don't know what the upside is. I don't know. That's why I want to use a trailing stop. You use something like a simple trailing stop with a simple moving average. But I think, if the cup and handle could work, again, if the broader market turns down sharply, so too will this stock, make no mistake about it. But for the time being, if I want to be long, the stop that I have in mind, I have circled, is about somewhere between 105 and 107 on Palantir. So that's Palantir, that's United Health, that's S&P, that's QQQ, that's SPY, that's VIX. That's a lot of stuff we're giving you guys here for free here this morning. Now, let me also go through one more thing. And I talked about a way that one could maybe hedge a portfolio. And this is not an advertisement on this portfolio. I'm just telling you there are ETFs out there that can do this. This one here, the ticker symbol is T as in Theodore, AIL. Basically, what it does is, if you keep it very simple and oversimplified, it goes up if the market goes down, right? It's not an inverse position of the S&P. It's a bit more complex than that. It uses options. But if we were to see another market drop, then this thing would go, meaningfully higher. So ticker symbol T as in Theodore, AIL is an ETF that could work for that. Again, not a recommendation, purely educational, as you guys know here from thesteadytrader.com. But it's something that I think is worth looking at. How you size that and all that, that's an investment advisory question. Check with your investment advisor, or of course go to bluemarlinadvisor.com. We can help you with that there. But otherwise, TAL, just an interesting idea if you wanted to. Tail, basically, the reason for the ticker is for tail hedge. If you look at a bell curve, it basically protects the left tail from that's for your right, so left from your perspective, meaning the large drawdown. So that's something that's interesting as well. So here we are, just a little bit over 13, 14 minutes here this morning on this Thursday morning. Look, I actually think that there's a better chance today and tomorrow that the market gets a bit more dynamic again. We've seen a one-way squeeze on the upside. Palantir is a great testimony to that, and some of the other momentum stocks. Again, I want to be a bit careful up here, as I just said, given where the broader indices are in the froth zone, which, if I still have that here, that's the chart that I brought up earlier and yesterday. I'm just being patient. And for what I'm really looking for those of you guys that are going to join us over in Trade Ops, our members area here in a few minutes, I'm really looking to see if I can capture a bit of downside. If we see even just an intraday sell-off today, I'm looking for that. I'm going to be using the TST Trender. It's our momentum indicator. So I'll be all over that here today. Stay tuned over in Trade Ops. Also, I'll see you guys back here on Monday. We don't do this morning show on Friday. That's to save my health. I do a lot of talking, and it's just a lot. So I'll see you guys back here Monday morning, and all of you guys that are members, I'll see you over in Trade Ops in a few minutes. Have a great weekend. Have a great Thursday and Friday, and we'll talk to you soon. Thanks for being here. Oh, very important. Subscribe to the channel. I always have to repeat that because if we don't have enough subscribers, we'll have to shut down the morning call. And, that would not be good. So please do that and give us a thumbs up, tell everyone you know, and we'll see you soon.